Hello, this is Brian Rezny, President of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. Well, we're into 2023. As I've talked in previous videos throughout 2022, volatility is normal. Expect volatility this year, although we firmly believe that the U.S. economy is going to have a better year on the economic front, at least with the overall equity-based markets. But volatility is going to be here. Volatility has always been here. I've had a few clients ask, do I continue to see extended volatility? Folks, we're always going to have 10% yearly corrections. That happens at least once or twice a year in all asset categories. I wish we never had volatility, but it's normal. You really need to look at a 3 to 5 year average. And what's interesting, I kind of look back at the last 3 years, and this includes 2022, mind you. Clients that have been clients for the last 3 years, including 2022's pull down of the overall equity markets and the bond market and all asset categories in general, our clients still had really an excellent return on the average 3 years and the 5 years. So again, while 1 year nobody likes being down 100,000 or 500,000 or 600,000 potentially, depending on the size of your portfolio, these things happen. We get a 20% correction statistically every 5 years. It doesn't mean the market's down for the year, but it means some years we are down for the year, some years the market drops 20 and it recoups before end of the year, we go to new high ground. All these things are possible, so just realize that. But generally speaking, I talked about us being in recession last year. We were clearly in a recession in pockets of the economy. We're going to continue to go through recessionary fears and parts of the economy in 2023 that are currently in recession, and I'll pick on housing. Housing is clearly a big driver of the U.S. economy, and housing continues to be in a recessionary environment, which really is helping slow the growth of the economy, which should help control some of the inflation numbers, which we're already starting to see. What's interesting, just to give you a talk about inflation, the peak inflation last year was running at about 9.1%. By the end of the year, inflation was down to 7.1%. But if you look at the last 5 months up until really the November timeframe, inflation was running at an annualized pace from that point forward at 2.6%. So are we going to see lesser inflation in 2023? I certainly think so. As we're seeing these indicators all starting to come about, a lot of the ones that the Fed looks at are really past indicators, and if I look at a lot of these leading indicators, we're starting to see really a big rollover of the inflation front. That is net positive. So hopefully then at that point the Fed takes their foot off the gas pedal on interest rates, and really we start to hopefully have an economy then that starts to have a little bit more vigor, and generally speaking a better growth in the overall equity-based markets. Interesting though, the bond market had a worse year than the equity market last year. I'm going to repeat that. The bond market actually had 50% more as a decline, a 50% greater decline than the S&P 500. If I look at the S&P 500 last year was down around 18.5%. If I look at the long-term treasuries, TLT as an example, which is 20-year plus treasuries, was down over 31%. So again, bonds went down substantially more than equities. And people say, aren't bonds safe? Bonds are not any more safe, in our opinion, than the equity market, depending on where the cycle is. So this is one of those one-offs and anomalies. Now, what do I think bonds will do this year? I think bonds are going to have a better year this year. Why? Because the rates are already up. Eventually, the Fed's going to come in and not raise rates, and really potentially, as I talked, start looking at reducing rates to re-stimulate the economy. So everything runs in cycles. Every year you're not up 10%. Some years you're going to be down 10%. Once in a great moon, you might be down 20. We haven't seen a 20% down year really unless we go back all the way to 2008. So you're talking a 14-year time frame that we've seen a negative type year like that. So again, is that followed by another year of negativity? Typically not. But we are seeing potential for the U.S. economy to do well. We see inflation abating. We see great opportunity. And again, nobody likes volatility, but generally speaking, I see greener pastures ahead. And over the next 3 to 5 years, I think clients are going to be generally very happy, as our clients have been generally very happy the last 3 or 5 years. If you have any questions about your portfolio, if we need to schedule a phone or in-office review, please call the office. And again, let's have a prosperous 2023. And again, if you have any questions, make sure you do contact us. We're always there for our clients to give you great service and great financial management. Have a safe and profitable day.